Hey there, I'm Scott Welsh, and we've just got a short video today. Maybe shorter is better. I'd love to hear your thoughts on that. I tend to get excited and ramble for about 15 to 17 minutes. I don't think it's rambling. I'm rambling now. It's going to be a shorter video, but it's going to be on a very powerful topic, the holy grail of trading, which you and I both know is diversification. We're going to take it on and discuss it. Three things today. First of all, I am on Facebook now. If that's your medium, look up Scott Welsh Strategies and I will be there. Three things today. What if in all of your trading you have one favorite strategy or one favorite chart of a strategy, one favorite instrument? What if you have one? What do you do about that? Two, what are the dangers if that's true? Now, maybe you don't. Maybe you trade 10 charts and you're all fine with that or more. But what if you just like one? Is there a problem with that? And then we're going to hit the holy grail. Does diversifying help us in all situations? All right, disclaimer. We are going to talk a little bit of numbers here. Please do not risk anything you can't afford to lose, blah, blah, blah. Hypothetical numbers. Here we go. Let's say you have a favorite, right? You're not supposed to, correct? We're supposed to diversify. We're supposed to be unemotional. We're just supposed to trade the charts and trade the rules. Or if we're discretionary, we're supposed to make our rules and then make new judgments and so forth, right? Rules to entry, and then you get sort of by the seat of your pants. But in other words, you just trade the charts without pride or prejudice. But like I said, what if one chart and one instrument is your favorite for whatever reason? What do you do about this? Now, this topic has been on my mind pretty much nonstop for the past number of weeks. I've been thinking about this all the time. I hope it's something that's interesting to you. My favorite chart is the dollar yen Forex Hornet robot chart. 15 minutes. 15-minute dollar yen Hornet, right? It's my favorite. There are a lot of things I trade. I don't trade it just. I have, and in actually one account, this is all I trade. I have others, but there's a reason why I like this one the best. It's my favorite. It's my oldest. When I started creating robots back in 2012, been trading since '04, but that was discretionary. Started trading robots in 2012. This one was one of the first ones that I came up with. It wasn't the first, but it was right at the beginning. So I've been looking at it or something like it since 2012, 13, 14, 15, 16, 17, 18, right? That's a lot of years. This is my most understood. I understand the system, of course, but I understand why it trades. When it loses, I'm like, I get it. When it wins, I'm like, haha, market's right for that. When I go through a losing streak, I don't get really upset. I just understand the way this one trades for whatever reason. Have you ever looked at a chart and like, I don't get it. I don't know why it's taking trades. I don't know why I'm taking trades on this pair now. They don't get it. It didn't act right. This one doesn't always perform. It's not perfect, but I understand it. And of course, I'm biased. I did make 100% in 1 year trading just this chart. Now, that was a time when we had bigger leverage back in 2014. But when you make a big return on a chart or on a robot, it tends to live in your heart fondly. Okay? Those are some of the reasons why this is my favorite. And when you look at the overall testing, '03, because that's as far back as my data goes in Forex, '03 to 19, the metrics on this particular chart are still the best I've seen of anything. There are others now that are getting close. There are others that I'm researching that I like, that are really taking my attention. The daily charts, for example, are really getting my attention. But I've never seen anything, nothing anyone's ever sent me, no webinar I've ever seen has beaten these metrics. Say that, and again, please understand, it still has years that are right? It was last year. It's been so far this year, right? It was great actually until December last year, and then December was bad. If it stopped in November last year, it was awesome. But my point being, there are reasons why it's my favorite. Yes, it performs, but not always. That's really, really important. You say favorite, and people say, oh, it makes 100% a day. No, but it did make 100% in a year with real money. That's fact. Okay. So what are the dangers? All right. It's easy. This is my favorite. Just trade it. How simple is that? End of discussion. Well, that's what common sense says, and that's what my brain has said, but there are problems to this, right? For one, we're not supposed to do this. How many trading books, how many trading videos do you have to watch to say, do not trade one thing, diversify, diversify? Jim Cramer says it in stocks. Everybody says it. The podcasts I listen to say it. Everyone says it, right? So to trade just one thing goes against the grain, and there's a lot of chirpers that are chirping at you saying don't do it. And that's hard to be a contrarian. Be a contrarian. It's not easy. Two, what about the losing streaks? When you trade just one thing and you lose a bunch in a row, you're just losing. There's nothing on the other side that is winning while you're losing. There's nothing happening except the losing. And that is rough. You have no teammates to shoot a few baskets for you while you're in a gold spell. Okay? That's a problem for some people. Three, of course, black swans. First of all, are black swans really a thing? I know. Smart people talk about black swans. I know. I know the research. I know 2008. Wait, was 2008 really a black swan? I mean, it was months, right? I know flash crash in the Swiss franc. I know the flash crash in the pound a few years ago. I get it, right? But think about the black swans in your life. How many black swans have you really had? I literally can think of zero. I'm in my 40s. I don't have any really black swans. I have surprising events, but anyway. But assuming these black swans are real, because everyone tells me they are, and I get it, I'm fine with it. Please don't get angry at me. Being in one chart and having a black swan is a problem. If all your money's in one thing and we have a flash crash, that's a problem. Of course, it could be a flash crash the positive way too. Optimism. Anyway, that's a real problem of trading one thing. What if something goes wrong? You have no recourse. You have nothing. You just make or miss with that thing. Of course, the stock market went down 80% in the 2000s. Anyway, and what do you do on a big account? If you're trading just one thing, what happens if you need to trade 150 lots on that because you have a big account? Is it still going to perform? That's undetermined, right? We see big fund managers that can't perform when their accounts get big. They're great with $1 million under management. They're terrible with $100 million under management. It's a real problem if you trade one thing. You can't get too big, okay? So again, diversification solves all these problems. It quells our desperate need to fit in. I need to do what everyone else does, otherwise I'm bad. It helps losing streaks. Other things are winning while you're losing. Helps losing periods. That can win while this one loses. Hey, everybody's happy. It lessens the impact of black swan events, right? Not by a whole lot, though, because a black swan can affect more than one thing. If you're trading an index, a futures index, I mean, that's a diversified thing, but it can still, if you're in all the indexes, a black swan's probably hitting them all. You know what I mean? Anyway, but it keeps trading alive also on a big account. You can take a big account and still perform if you are diversified. So we should diversify, right? Done. Diversification also takes your trading profits and sets them on fire, right? Diversification takes away all your money. Does anybody talk about this? I know the benefits. This is why I've been having this discussion with myself. I did a study, okay, real study with my robots, okay? Do it on your robots. That's the point of this video. Check out your systems. Simple diversification, okay? This is simple. One robot versus two. Two should be more diversified than one by definition, and two should be safer and better in every single way, okay? So I took my favorite, you know what that is, and then I put my favorite plus one, and I did a study back to 2016. I got all the trades out, added them all up by hand, right? That's the kind of stuff I do for fun. The amount of losing overall months was lowered with diversification. Fine. Diversification wins. Check this out. Overall, diversifying made 57% less money in just 3 years, about 3 plus. Okay? Just 3 plus a little. Wow. 57% less than just trading one thing? It's like between 15 and 17%, depending on how you round. It's like 15% per year less. That's a whole index fund less. Well, actually, twice an index fund, sometimes 3 times an index fund, right? That's an incredible amount of profit to give away. And think about this. I'm already okay with my favorite maximum drawdown, and it's easy to compute. One thing trading, I know what the worst trading period is, and I'm okay with that. Now I'm diversifying. I'm lowering a drawdown that I'm already okay with. I'm already fine with it. Yes, anytime drawdown is less than that's good. But I'm okay with the drawdown, and now I have to make 57% less? What's the argument here? Why am I diversifying? Why? Okay? Bottom line is this. I know we're supposed to diversify and lower our risk. I get it. But why doesn't anyone talk about how much money we could lose? This is a real study with real research on robots that I actually trade, and it makes 57% less. That is a boatload of money. And if I diversified more, right? I only did 2. What if I did 3? What if I did 10? I'd probably lose more, right? I didn't study that for this video, but I've studied in the past. And as you diversify, profits go blah, 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 blah down, right? I'm not saying that would be the case again this time, but in the past, that's shown more. We know what 2 does. 3 to 10 probably be worse. So here's the point of the video. It comes down to the purpose of your trading. Don't just listen to what people say. Study it. Look at your systems. How well would you be doing if you traded only your favorite chart? Why are you trading other things? You need answers for all of this. And this is my bottom line. If the goal is to make money, diversification is terrible. Terrible. 57% in 3 years. Terrible. Okay? But if your goal is safety and to just make a smaller amount of money and to lower the drawdown, then of course you should diversify. Trying to open your minds, trying to get you to think. Maybe trading a bunch of things has cost you money, and maybe you should just stick to the one you like. Okay, lifetime memberships are back. We've got a couple of lifetime members just signed up. Hooray for that. You can become a member by going to memberships if you're interested in trading robots along with me. And you can also join the free newsletter by going to scoutwealthstrategies.com. All right, a little shorter this week. Hope it was interesting. This is something that's really been on my mind. Hopefully you got a good idea or two. See you next week. Bye for now.